China's housing market could rebound this year after suffering a sharp fall in 2022. The prices of new homes rose in January in half of the 70 biggest cities. Shanghai and Hefei saw the biggest increases, with house prices going up by 0.7%. That's compared with December. Real estate is vital to the Chinese economy as a whole. It accounts for 40% of all domestic bank lending and provides local government with half of their revenue. Since November last year, the Chinese government has introduced a series of measures to try to restore the property market after prices fell by 26.7%. Well, let's talk now to Zann Quek, Regional Director and Head of Greater China for Salboy Group, a property development company. Zann Quek, welcome to the programme. Good to have your company. So is this the end of the great wobble on Chinese property?
Well, it's always best to take a long-term view when we're talking about real estate, especially given that the real estate sector has a lag time. So policies put in place now will require time before the end result is achieved, but we're moving towards stability now and a healthy rate of growth long-term. Thanks to the deleveraging drive from 2020, housing bubbles have been largely swept away, leaving more room for the property sector's revival this year. So these positive developments will definitely provide a soft landing for the market, once again making the sector an important contributor to economic growth this year and beyond.
Some commentators continue to write that China's property market is still in crisis. Is it? What is your analysis?
Okay. Housing prices in China have grown significantly unlike anywhere else in the world over the past decades. So if you take decreasing numbers across 15 months and compare this with the multifold growth you see in the Chinese real estate sector, it's still relatively short-term view of the whole situation. The most important thing to note is that policies in the sector are set with a long-term view, and the key here remains to be stability and affordability for the people. Over-leveraging usually leads to speculative overdevelopment and excessive buying. Eventually, a readjustment is always necessary for the greater good, although the initial period will feel very much like a teething process, which is uncomfortable and even painful. So by working towards the long-term goal of preventing over-speculation and stabilizing the market, people will be able to afford a roof over their heads as housing affordability will be bridged with income distribution. Again, housing is for living, housing is not for speculation.
The Chinese are like the Brits, are they? I mean, endlessly fascinated with housing. China saw new home prices rise for the first time in a year. Why did that happen? Was it simply down to the Chinese government introducing all those measures?
Okay, so new home prices in 36 cities saw a rise, and that's an increase from 50 cities from December. This is due to the favorable real estate policies in place. The market is also expecting performance to sustain and rebound significantly later this year, with support from demand-boosting stimuli measures, hence the performance. So, for example, China's central bank and regulator have established a dynamic adjustment to mortgage rates for first-time home buyers. The floor on mortgage rates in certain cities have been abolished or lowered, encouraging property financing and purchase. This helps lower the cost of buying a home and better supports housing demand. And the smaller down payments have also been helpful.
Zann Quek, good to talk to you. Thank you very much indeed for coming on the programme. That's Zann Quek from Salboy Group in Beijing.